Let's get in Chakri Lokpriya. On that note, he's managing director at TCG Asset Management. Joins us right now on the show. Chakri, good having you. Thanks for joining in. Chakri, I remember our budget discussion, and I'm not pointing out that people were wrong, but I remember post-budget when we were talking about the corrections that started coming in Feb and March. Most people were of the opinion that a lot of good quality stocks have corrected. It might be a good time to buy them. Probably was as well if you look at the growth prospects, but the corrections have only deepened since then. Have you put in more money to work, or right now you're sitting on the sidelines because of all that's happening around the world, not just in India?
At the time of the budget, the concerns were that it was just India. Now, post that, of course, trade wars have started, and also alongside, Indian demand has not picked up. If you looked at the corporate earnings contribution towards tax collections has fallen short. If you look, GST collections are likely to fall short. Current account deficit has widened way remarkably higher than earlier estimates. So against this backdrop, your rupee has fallen. It's hurt various industries. So from this level, I think some of the correction is overdone in some pockets. For instance, if you look at construction companies, they're all down between 20–25%. More they're trading at about 10 times PE. For a very strong earnings growth still for the next visible earnings growth for the next 12 months to 12 to 24 months. On the other hand, metals, they are impacted because of trade wars, etc. But again, they've also corrected. So yes, there are pockets of growth, and we're putting to money work there.
What about some of the metal counters? What do you make of it? Globally, yesterday we saw most of the global metal counters were down in trade. Again, the trade war impact, and some of the valuations have come in attractive range. Would you venture out into the metal space, or you believe that it's more of a cyclical industry and it's peaked out?
Metal stocks have corrected, and cyclically they have. It's unlikely that they have peaked out. There's still more growth to come. Okay. And because US is strong, Europe is just recovering. The new uncertainty is whether the trade war becomes a real trade war. It's not a trade war yet. And so against this backdrop, stocks have corrected 50–20%. They're down in single-digit multiples. And if you look at selective companies, for example, Jindal Steel and Power is largely domestic steel consumption, meetings, and therefore power demand. And also, so that company is corrected a lot. Tata Steel has corrected, way to Hindalco has corrected. So these stocks, which are large, liquid, and are available at attractive valuations, is where to go, I think.
What about Tata Steel in particular? Let's say this entire thing with ThyssenKrupp fails to take off because there are a lot of concern. It can go, it can't go. Then what happens to Tata Steel? Is that a big risk that they're running, because they've already acquired Bhushan now? And the debt that they wanted to transfer to the JV, that will not happen. Will that be a big problem for Tata Steel?
It's unlikely, because Tata Steel has, gone through these acquisition cycles several times in the past. And so you have to give benefit of doubt that, they would be able to successfully integrate as well as pare down debt. And also, if you look at capacity utilizations for steel, are running at fairly high levels, demand is strong, and therefore the pricing, irrespective of trade wars, is likely to be strong for the next couple of years. So that has been factored into the paying down of the Bhushan Steel debt. So from that perspective, Tata Steel looks good post what's corrected recently.
Interesting. What have you made of this whole saga on ICICI Bank? Now, of course, there is new developments that have come out yesterday as well. The news flow will just continue to come on, Chakri, on this one. What does somebody who likes the valuations do? Bide his time or take a plunge?
Indeed, the news flow is unfortunately likely to continue. And unfortunately, I think it's time to start dipping in and buy ICICI Bank. This is a large bank which has both retail and corporate presence. Management issues are now well known, and now the latest SEBI one is expanding the so-called investigation into dozens of companies into which. Now, this kind of a thing is not good for the economy, is not good for the banking sector in general, which I'm sure at some point will, because the bank in itself, ICICI Bank, its board, has been fairly open in terms of that they're ordering one probe after the other, internal investigations. But yes, news flow is going to be this, but I would selectively start adding it in tranches, because it does offer value at current prices.
Interesting. Do you Have you looked at the business of KRBL? Have you looked at all that's happening in the recent past?
And unfortunately, I've stayed away from the stock and I don't know much about
But you don't know much about it. Never mind. What about the globally impacted stocks, Motherson Sumi, for example? I mean, what's ailing this one?
Well, Motherson Sumi is clearly the potential of trade wars impacting in it. They have significant presence with all the major European manufacturers, and now if it's going to lead to some amount of business disruption for its to whom it supplies to, you know, for example, Harley Davidson is not, of course, a supplier, but is moving factories to Europe. So some of the car manufacturer guys would also do so to the US. So again, I think this trend until it settles down, but I think it does offer, beginning to offer a fairly, you can start nibble at the stock.
What about, just look at Kajaria Ceramics, it's at a fresh 52-week low, Union Bank, Bank of India. PSU banks, are they value propositions, or are they, you know, would you totally avoid them at this point of time?
The smaller PSU banks, I would avoid them at current point, because it was expected that there would be capital infusion, there would be QIPs, etc., which has not happened at the pace at which it was supposed to have happened. And so against this backdrop, the large PSU banks, still SBI offers tremendous value. I think that's the way I would approach PSU banks.
What about, you know, counters like Bajaj Finance? It's moved up, Bajaj, Finserv, both of them are trading at record highs. Their market cap together is more than all the PSU put together, except for an SBI, and they themselves have a market cap in excess of SBI. If someone is looking to take positions into, you know, Bajaj Finance or Bajaj Finserv, would you be concerned on the valuation of these two companies, or do you believe that, you know, if someone wants to take a position, there is still enough potential for these counters to perform?
Both of them extremely well-run companies, and then, you know, the new mantra for everyone, private, public, and NBFCs is retail, and they do that. And that still, the loan book is still clean, but valuations are reaching up there. You know, given that it's a large, what do you call, weights in an index, it will attract a certain amount of passive flow. And so that's likely to continue for those stocks. But for active managers, I think the valuations are getting there, so for in terms of incremental returns.
So what would you do? I mean, would you consider a switch out of a Bajaj Finance into something that is better value?
I would continue holding.
Holding.
Because of there's a certain amount of passive inflow that stocks will continue to see.
And the growth in the management.
Exactly. So for these reasons, I would continue to hold them, but maybe not make fresh buys.
Okay, let me ask you, these brokerage stroke diversified financial services names, they are chalk and cheese right now, right? The IIFL and Edelweiss have continued to stay rock solid. Motilal has been hammered out of shape, trading at close to 52-week lows. The other smaller ones like MK and JM2, not quite up there. Do you look at this space actively as an investment candidate space? And if so, would you be scouting something out here?
Yeah, well, India Infoline has now become a slightly different animal. In addition to brokerage, they have wealth and other businesses, and so does Edelweiss. Whereas the smaller brokerage houses, I think one of partly the fears in the market is the fears that you're seeing in the overall market, that if this trend continues, eventually it will probably lead to lower volumes of trading water and therefore lower valuations for a shorter period of time. And hopefully that theory is wrong.
Okay, let's pull up the cement stocks, and they are doing extremely well today. Pull up Ultratech. Ultratech is up over 1.5% in trade. ACC has started to move up. Ambuja has started to move up. ACC at the highest point of the day. Let's pull up Ambuja. Let's pull up India Cements. Let's pull up Dalmia Bharat, was at a fresh 52-week low till yesterday. It has managed to inch up in today's trade. What I can see is Star Cement is moved up. So cement as a pack is doing well. Chakri, is it the right time for someone to invest in cement? Most of these counters have corrected 30, 40, 50% from their highs. Would you venture into cement?
You know, cement stocks, one, like you said, have corrected. Second, you know, the demand, the volume is strong, but the pricing has not been there. Of course, today is a day where, you know, there is the stocks or expectations that GST might be cut on some of the cement names. But I wouldn't hold my breath for GST, because then you'd have the anti-profiteering and all that clauses to ensure the pass-throughs. But they're trading at low valuations. If you take Heidelberg, you take Ultratech, And all these names, valuations are attractive, so I would start buying into these companies.
Yeah, but news came in yesterday. There was this Morgan Stanley note indicating that, you know, across North India, price hike has been taken. Today, Citi came out with a similar report. They also said that, you know, North India, there is a price hike that has come in a little bit in the southern part of India. Do you see pricing coming back to cement companies, given the fact, obviously, monsoon will have an impact on them, but despite monsoon, there is pricing that they take, price hikes that they're taking.
You know, price hikes is something which should have come maybe a quarter ago, did not happen. Now it's happening. It's a good thing. So yes, I think that's a good sign that, you know, along with demand, there is pricing power beginning to come back. And clearly, yes, you know, the stocks have corrected. I will buy into them.
Just a quick update. 2 or 3 some interesting moves are happening. Avanti Feeds, and we'll get the management a bit later on. The stock is up 18% today, 611 points right now, on 613 on Avanti. Info Edge has gained substantially post this acquisition. Darshan was speaking about it all through the show in the morning, and Info Edge is up about 7%. You can, of course, the interaction has already happened with the management. You will get a slice of that conversation on the site in due moments from now. And KRBL has recovered some bit of lost ground, up 3.5% after starting off way lower. So watch out for KRBL as well in the session today. Chakri, if somebody, you know, 2018 doesn't seem to be a year of returns coming in. It probably gives you a chance to correct your portfolio, maybe make some bets with a slightly longer term perspective. Where is it that you're comfortable putting fresh money to work right now? Because like you said, you know, I remember our conversation 6 months ago, you did think that PSU banks could show some bit of flavor. That landscape has moved quite strongly. So maybe there is not enough certainty in hope stories. Are you betting on certainties right now where the valuations have come off, or are you betting on hope stories wherein the promise of growth is there, but we don't know what the landscape could be like?
You know, good question. Some of this hope was actually underpinned on concrete government actions and pushing through events happening, which have got delayed for various reasons. So against this backdrop, now trade wars weren't there, now they are there. So what do you do against this backdrop? Domestic is still weak. Exports look uncertain to an extent because of potential trade wars. They're not real trade wars yet. So an Indian market is corrected. So one, to avoid trade wars, I would buy the domestic names, which is banks, infra. And 2, you know, sectors like pharma and IT, which are usually not impacted by trade wars, because these are more IT is a service-related companies. This is not about creating local jobs, etc. And so from that perspective, those are fairly insulated. But, you know, in a trade war, if it just comes down to the export-import differentials between each country, then these sectors also can get hit. But that would be the approach, which is domestic sectors, banks, infra, and IT and pharma.
So let's talk about IT. Mid-cap IT has already rallied, but the move hasn't been very sharp on the large cap, except for a TCS. What do you make of the valuation gap between TCS and Infosys? Do you think that Infosys has still much more room to play catch up to Infosys? Infosys has much more room to catch up with TCS now?
TCS is executing really well. Infosys, the new management is taking baby steps to correct its path. So against this backdrop, TCS will retain its valuation lead. And so I'd see that thing continuing for the near term at least.
And what about, you know, the other ones, Wipro, HCL Tech and Tech Mahindra? Anything that you feel that should be accumulated at these levels? HCL
Tech has corrected, you know, post its earnings results, fairly good results at that. And so I would clearly, and fairly visible earnings, so I would buy it, HCL Tech, as well as Tech Mahindra at current levels. Both. I mean, Tech Mahindra is also looking good for different reasons, which is its billing book is looking good.
Okay, my last question, Chakri, and that is anything which is down in the dumps and looking good. So there is one set of stocks wherein the valuations have come off. The stocks may be at 52-week lows, but not down in the dumps. There are companies which are trading at substantial multi-year lows as well, for whatever reason. Maybe fundamental reasons which could correct over a period of time. Are you looking at that space at all?
I think that's a space which I'll continue to stay away from.
Stay away.
But valuations which have corrected over the short term, those are largely more or less unfounded or unfounded fears kind of things.
Okay. Interesting. Chakri Lokpriya, Very good talking to you today. Thank you so much for being with us and giving us your thoughts. Really appreciate your time and look forward to having you more often on this.
Thank you
forum.
so much.
Thank you.